Here is how empires die. Not with invasion, not with a single catastrophic defeat. They often hollow out from within. And it happens slowly, almost invisibly over generations. First, an empire builds, it produces, it creates real goods, real value, real strength. And that productive capacity is the foundation for everything: military power, cultural influence, global reach. But as the empire matures, something shifts. The people who built the empire get rich, really wealthy, and they discover something. It is easier to make money from money than to things. Finance becomes more profitable than factories. Managing capital becomes more prestigious than creating it. The best talent stops building ships and starts focusing on structuring deals, selling companies, and doing all the work that finance does. And slowly, so slowly that no one notices until it's a little too late, the productive base that built the empire erodes while the financial sector expands. It's not a theory, it's a pattern that's repeated across history. Spain, the Dutch Republic, the British Empire, arguably the Roman Empire to some extent, and now possibly the United States. Let me show you in this video how this pattern breaks down across time, history, and empires. Welcome to the Timeless Investor. I'm Ari Van Gemeren, real estate fund manager, student of history, and your host. On this channel, we extract timeless principles from history, from the villains, from empire, from great builders, and from the rise and fall of great civilizations, lessons that actually matter for you today when your capital is on the line. And this pattern is older than you think. Take Spain. In the 16th century, the Spanish Empire was the most powerful force on earth, one of the largest empires in human history. Gold and silver flooded in from the Americas. Spanish armies dominated Europe. But Spain didn't use that wealth to build or grow their productive base. They used it to borrow. The Spanish crown became dependent on Genoese and German bankers, the Fuggers, the Grimaldis, to finance their endless wars. They defaulted on their debts 4 times under Philip II alone. The wealth that could have built and solidified Spanish industry instead flowed to foreign financiers. And by the 1600s, no banker in Europe would lend to Spain anymore. The empire that had conquered half the world couldn't finance its own navy. Or take the Dutch. In the 17th century, the Dutch Republic was the marvel of Europe. They invented the stock exchange, the central bank, the multinational corporation. Amsterdam became the financial capital of the world. But as the 18th century progressed, Dutch industry declined while finance flourished. The industrial sector was, quote, partly dismantled while Dutch capital flowed abroad, ironically, often to Britain and America. The Dutch became a nation of rentiers, collecting interest while others built factories. So when the wars of Britain and France came at the end of the century, the Dutch discovered they had financial sophistication, but not productive depth. By 1815, the Netherlands was largely deindustrialized, saddled with debt, and forced to default for the first time since its independence. But the clearest case, the one that matters for us most today, is Britain, our brother, cousin across the sea, however you want to call it, because Britain is a case study in financialization, and Britain financialized successfully for over a century, but then the bill came due. After the Napoleonic Wars, Britain was the undisputed hegemon of Europe. They had the world's most powerful navy, the world's largest industrial base, and something even more valuable: capital. Massive amounts of capital accumulated from a century of industrial dominance and global trade. So what did Britain do with that capital? They lent it out. British banks financed railroads in Argentina, mines in South Africa, plantations in Southeast Asia, infrastructure projects across the Americas. The city of London became the center of global finance. Sterling-denominated bonds became tools of diplomacy and control. Britain didn't conquer with its armies anymore. They conquered with spreadsheets. And for a while, it worked absolutely brilliantly. And by the way, the parallel to the United States today, I don't want to belabor the point, very clear. Britain turned its ability to lend to others into dominance, and they embedded their empire in balance sheets, not the maps and not direct military control, but there was a cost and it took decades to become visible. As the empire matured, something started to shift. Making money on money became more profitable than building, producing, or innovating, and the talent followed. In 1900, a brilliant young Englishman aspired to work at Barings Bank, or to join the colonial service, or to become a barrister. These were the gentlemen's professions, prestigious, lucrative, and respectable. Meanwhile, a brilliant young German aspired to work at Siemens or Krupp, or one of the great engineering firms building the machines of the future. One country built financial instruments, the other built machines. You can see where this is going. By the early 20th century, Britain's industrial base was already eroding, not collapsing, eroding slowly, invisibly. The Bank of England data tells the story. In 1950, manufacturing still accounted for about a third of UK GDP. By 2022, it had fallen below 10%, but the seeds were planted decades earlier. Take British shipbuilding. In 1900, Britain built more ships than the rest of the world combined. The Clyde, the Tyne, Belfast, these were the shipyards that built empire. By the 1960s, they were dying or gone. Japan and Germany, nations Britain had defeated in war, were building ships faster, cheaper, and better. And by the 1980s, British shipbuilding was essentially dead. An industry that had defined national identity for centuries, gone. Or take British Leland. This was Britain's answer to General Motors, a national champion formed by merging most of Britain's car manufacturers. Austin, Morris, Jaguar, Land Rover, Triumph. It was supposed to compete with the Americans and the Germans, and instead it became a national embarrassment. Underfunded, poorly managed, plagued by labor disputes. The cars were unreliable, the factories were inefficient, and by the 1980s, most of them have been sold off or shut down. The best British minds were not trying to fix these companies. They were in the city of London, making fortunes in finance. Why struggle with labor unions and factory floors and divisive politics when you could make 10 times the money structuring bond deals? And this is how empires hollow out, not through invasion, not through catastrophe, through the slow migration of talent and capital away from production and towards extraction. The UK became a service sector economy. The city of London remains very powerful, but the country beneath it became hollow. And then the wars came and the cracks became undeniable. In World War I, Britain entered as the global financial hegemon, but it quickly found itself stretched. Financing the war effort required massive borrowing, much of it from the United States. Its industrial base, already diminished, couldn't keep pace with the demands of total war. Britain could finance a war, but it could struggle to build one. So by World War II, the situation was far worse. In 1940, Britain stands completely alone. Nazi Germany has conquered France, U-boats are strangling supply lines, the Luftwaffe is bombing London every single night. And Britain has a problem that all the financial sophistication of the world cannot solve. It doesn't have the industrial capacity to match its enemies. This is very similar to why the North ultimately defeated the South. You had an agrarian economy in the South and a deeply industrialized Northern economy. The South never had a chance. There was never a chance for the South to truly win the Civil War. Almost impossible unless politics prevailed in the North. And let me be clear on this note with Britain. Britain could still build. British factories would produce 130,000 aircraft during the war. That is not nothing. But it wasn't enough. Not for a global war. Not while defending an entire empire. Not while being blockaded. Britain needed help, and it needed it from a younger, hungrier nation that hadn't financialized yet, America. The United States had 17 million workers in manufacturing. Factories that could be converted to war production, an industrial base that had been growing while Britain's relative capacity declined. America didn't just have money, America had capacity. Within 4 years, American factories produced 300,000 aircraft, 89,000 tanks, 3 million trucks, 41 billion rounds of ammunition. Britain couldn't come close to matching that scale. America stepped in with the Lend-Lease Act, 17 million tons of supplies, then with soldiers, then with the industrial output that ultimately won the war. And finally, with the Bretton Woods system that replaced Britain at the center of global finance. Britain survived the war as one of the victors, but the empire did not. And the lesson was clear, even if most people missed it. Financial power is derivative. It depends on productive base of your country. When we can no longer build at scale, it is very difficult to lead. Now let's pivot and talk about today, because this is where things get uncomfortable. This playbook, Imperial Rise, Prosperity, and Decline, continues today, and it migrated from Britain to the United States. After World War II, the United States picked up where Britain left off. Very comparable in many ways to Britain becoming the global hegemon after the end of the Napoleonic Wars, right? France was the chief rival to Britain. Britain finally defeated their main rival, and they were undisputed masters of the world. This is very similar to the situation of the United States right after World War II. And the United States rebuilt Europe with loans. We backstopped global trade with dollars. And we grew a domestic capital market so big, so liquid, that the dollar became inescapable. Today, the US bond market and our lending market is our empire. Over $30 trillion deep, backed by the military, but governed by debt issuance. We don't export tanks, we export treasuries, and the rest of the world buys them. That gives the United States, America, immense financial strength. But it also led inevitably to some of the same patterns that Britain has experienced. Look at the numbers. In 2023, the FIRE sector, finance, insurance, and real estate, accounts for about 21% of US GDP, the single largest sector in the economy. Meanwhile, manufacturing has fallen to around 10%. In the 1950s, it was over 25%. Same trajectory, same shift. The question is, does it lead to the same outcomes? To answer that, we need to understand why financialization actually hurts. Because here's what nobody really digs into enough. Financialization doesn't change an economy. It extracts from it. Let me give you a concrete modern example. The leveraged buyout. A private equity firm identifies a target company. They acquire it, but not with their own money. They load the company itself with debt to fund the purchase. Then they extract management fees, dividend recaps, and consulting fees, regardless of whether the company itself succeeds or fails. If the company thrives, the PE firm makes a fortune. If the company collapses under the debt load, the PE firm has often already pulled out more than they put in. Toys R Us, Payless Shoes, Sports Authority, Radio Shack, dozens of household names loaded with debt, stripped of cash, and then discarded on the side of the road. Now ask yourself, what was created here? The products didn't improve. The employees were definitely not better off. Many lost their jobs. The customers, all of us, got worse service, but the PE firms made billions. It's not capitalism. Well, it is, but it's also extraction. And it's become a massive part of our economy. Private equity manages over $10 trillion in assets globally. These are not small players. And here's the deeper issue, and it's something a mentor of mine pointed out to me years ago. He said, the best and brightest and wealthy nations tend to go into finance. But what do they actually produce? Right? What do they produce? The best and brightest in the United States historically have aspired to go into investment banking at Goldman Sachs. But what do? They grease the skids of transactions and they make huge profits, right? But what value have they created? Think about that for a second. A brilliant 22-year-old graduates from MIT or Stanford. They could go design the next breakthrough in energy storage. They could build infrastructure. They could start a company that manufactures something. Instead, many of them will opt to go to Goldman Sachs or KKR and spend their careers optimizing fee structures and financial engineering. I'm not saying every banker is useless. I'm saying capital allocation matters. But when too much talent flows into intermediation, the productive base starts to erode. Britain experienced this exact phenomena. By the early 1900s, the best minds in Britain were not going into engineering and manufacturing. They were going into the City of London, finance, colonial administration, the gentlemen's professions. Meanwhile, Germany and the United States were building industrial powerhouses. And when the wars came, Britain could not outproduce its enemies. It had the financial sophistication, but not the factories. And Britain was very fortunate to have the United States as an ally who was an analog to Germany at the time, both industrializing, rapidly growing bases, and we had the capacity to outproduce Germany. Ultimately, we won. Here's the uncomfortable truth. You can have the most advanced financial sector in the world, but if you cannot build ships, planes, and ammunition when it matters, you lose. Finance is a tool. It is supposed to serve the productive economy. When it becomes the economy, you've got a serious problem. Now, you might be thinking, and I think the same, by the way, I'm not a doomsayer in the United States, but America still innovates. We have Silicon Valley. That's true, right? That's true. And there has been tremendous innovation coming out of this country. I mean, look at what Elon Musk has achieved with SpaceX, with Tesla, with all these different businesses he's built. I mean, it's incredible real world, actual productive capacity that's growing. But let's look closer at a lot of what's happening. How much of that innovation is actually production? And how much of it is just financialization in a cool Silicon Valley shirt instead? Facebook, big example, doesn't manufacture anything. It sells ads and arguably it wastes our time tremendously. And our brains are all being collectively rotted, right? I mean, we all know that. And we still love it. It's just a great drug, but we know it. It doesn't do anything. Google doesn't manufacture anything. It sells ads. Apple's fastest growing segment isn't products, it's services and fees. The biggest tech companies are increasingly rent seekers, not builders. They're capturing value. They're not really creating anything. The companies actually manufacturing things, semiconductors, batteries, industrial equipment, are increasingly located in Taiwan, South Korea, China, and Germany, not here. So where does that leave America? We run fiscal deficits every year. Debt to GDP is approaching 125%. Every crisis is met with the same tool, more liquidity. The question isn't whether America is strong today. We are unquestionably very strong today. The question is whether we're building strength for the future or are we borrowing against our future strength? I'm not predicting imminent collapse. I'm an American. I love this country. I believe firmly in it. And the United States is a tremendously strong country in many ways. We have an enormous productive base, a workforce envied worldwide. And frankly, we are a very different nation than early 20th century Britain. But I am suggesting this. The United States is following a very similar script to the one Britain wrote 200 years ago. And Britain didn't write it, by the way. As I said in the beginning, this is one of those patterns that you see playing out time and again. And it makes sense. It makes sense. If you want to make money, you're going to go where you make money. And inevitably that ends up being finance. But if the pattern holds, then the most critical investing question of the next decade isn't just what assets you own. It's whether those assets will hold value when empire inevitably shifts. Empires always shift. In the 20th century, the best trades were long the dollar, long US growth, long American credit. In the 21st century, it might be long scarcity, long real assets, long optionality, and long whoever writes the next chapter of global finance. We actually have evidence of what happened to land holdings in the UK during the decline of empire. Productive land, yielding land performed well. Many aristocratic estates preserved value across generations. Many did not, just to be clear, but it's more driven by those families and the intricacies of their financial situation, losing sons in the war. There's many different factors, right? But London, obviously, did extremely well. As one of the great finance hubs worldwide, capital continues to flow into the city of London even today. My take, productive yielding, scarce real estate in major cities will continue to be powerful hedges against any shifts in empire. Real estate and real assets hold value well in currency depreciation scenarios, which is absolutely the paradigm we are living in right now. We learned how to do this from the British, but we might be borrowing their ending as well. Spain, the Dutch Republic, the British Empire, the United States, all followed a very similar arc. Build, financialize, hollow out, and depend on others when they're ultimately tested. The pattern is visible. The trajectory is very clear. The only question that we have to think about on a micro level is how do we position ourselves? Thank you. If you found this valuable, hit subscribe, leave a comment, share with someone who needs to hear this story, become a timeless investor, join us here. And if you're an accredited investor looking for opportunities in real productive assets today in the United States, reach out to us. We're doing investments constantly. Love to hear from you guys. Think well, act wisely, build something timeless. Thanks for being here.